You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time to kick off the new year, 2017, with a brand spanking new episode of everyone's favorite bi-weekly source for all things options related. That is, of course, the Option Block, and my name is indeed Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-scintillating Options Insider Radio Network. Here we are, January of 2017. That means, yes, listeners, it now has officially been 10 years that the Options Insider Radio Network has been on the air. What a crazy thing to even contemplate. Madness has ensued in the resulting decade. It kicked off with just a little crazy show. I would just sit down. Wasn't that little. It's about 2 hours. Which is madness to think about in retrospect, too. But it was just one palooza of a show, an extravaganza. We'd answer questions. We'd do a bunch of other stuff, talk about the hot topics of the day, which I believe back then in 2007 were backdating and a number of other big things out there. Didn't really have any guests yet, and it was kind of still evolving because no one, quite frankly, was doing much for finance and zero for options when it came to podcasting. So we kind of created the genre and kind of had to figure it out along the way. So what a fun journey it has been. And fast forward a decade, and now I have to listen to the Rock Lobster and these guys and Uncle Mike. So man, how far I have fallen in that decade. But no, indeed, we want to thank you guys for tuning in. For those of you, some of you for all of it, but many of you for the better part of that decade as we continue to rock and roll here into the new year. And don't worry, we're going to be making some interesting new fun additions to the network and tweaking and changing things. I've been talking about having a best of show for some time. With 10 years of content behind us, we probably do need to do that now. So I think we'll get that rolling for you guys too. So you guys can just check that out if you don't have a chance to go fight your way through thousands of hours and thousands of episodes of content spanning the last decade of options. Crazy. Still can't wrap my head around that as I say it, but it is fun. And since I already have maligned them, I might as well, of course, introduce them on the old program. They're already taking umbrage, I'm sure. Let's start off in that paradise on earth known as St. Charles. We were joined for the first time in 2017 by Uncle Mike Tussaw from RCM Wealth Advisors. He of going long infamy / fame. Uncle Mike, welcome back to the Option Block and Happy New Year to you.
Fresh year, fresh attitude. Always love the first show of the year.
It is a fun one. We got a big spectacular coming for you, listeners. But first, let me introduce my other cohort, my other partner in crime here on the old Option Block program. You know him, you love him as the Rock Lobster. He who wields the band hammer over there in the pit chat, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, and Happy New Year to you as well, sir.
You know, I just realized you maligned both Tussaw and I. So all I'm just going to say is beggars can't be choosers, buddy.
It was a double.
You get what you get.
It was a double maligning. You're right. It was an impressive bit of maligning to start the year, if I do say so myself.
It was like a tennis racket in a Three Stooges skit where you just whacked us both at the same time. Tussaw just came in with a smiley attitude. What kind of crap is that? Where's the umbrage from that guy?
He lives in St. Charles. He's a happy man.
I'm gonna save the umbrage for later in the show.
Okay. All right. There you go. All right. I'm good now.
There you go. With umbrage forthcoming, listeners, we'll roll on into and kick off our 2016 Look Back Spectacular.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, a little bit different Trading Block than we normally do here on the program, because this is our first show of 2017. Still have to get used to saying that as well. So what we like to do here in the beginning of the new year is look back on the year that was. What a tumultuous year it has been. By the way, I forgot to mention top of the show, you guys can, as always, continue to join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixlr, Mixlr. Just if you can't remember that, just head on over there. You can't remember our URL, just go on there, search for options, you'll find us. And then if you are so inclined to click that follow button or subscribe, you'll create a Mixlr account. It's free, it takes 2 seconds. And then you'll be instantly notified whenever we go live. And given the response to our initial little live forays here in the latter half of 2016, I think we'll be doing more of it. I think you guys tend to like it, so stay tuned for that. But indeed, looking back here, kicking off our spectacular, what a year it was. You know, this time last year, we were all kind of just awestruck, dumbfounded even at just the roller coaster that the year commenced with. You know, it roared in like a lion, and it didn't really let up for the better part of 2 months. We saw January and a good chunk of February were just extremely tumultuous periods. 1% moves were the norm. You saw multiple, almost 2%, I think even a few beyond that days out there, just crazy aggressive moves out there. Volatility, of course, was all across the board. We saw, pretty much 1-2 punches from China and from the Fed and a few other elements in there. Earnings started to kick in, didn't really help. It was kind of just a perfect storm, to borrow that cliche, of things that were driving volume and volatility and all of the above. And then, of course, the year after that kind of quieted down for a bit. And then we did, of course, see in that early summer time frame, usually summertime, sell in May and go away, that oft-repeated cliche as well. Usually true in the options market as well, but we had a few outliers lurking in there. Most notably, Brexit came in mid to late June, and that injected a wee bit of life, shall we say, into the marketplace leading up to Brexit. Of course, a lot of us at the time were kind of scratching our heads saying, why are people dumping so much vol going into this vote? It was all on the strength of one poll, effectively. I think that there was a theme for last year, don't trust polls, because one poll showed that Brexit was pretty much not going to happen. Then, of course, we all know what happened, and the tumult that resulted, not just in broad equity volatility, but in commodity products like gold and others, was just seemed to be unprecedented until a few months later, in November, when Mr. Trump and his team rolled around and threw another wrench into the works, and what we saw was just crazy overnight volatility, sell-offs, and then rallies, and vol spiking into, I think the VIX cash spiked, and the futures spiked into about 22. We saw just things moving crazy across the board. In subsequent weeks, things were still very volatile and very aggressive. So it's been a crazy year, a lot to digest. But let's kick it off. Maybe we'll start with you, Mr. Rock Lobster. Looking back at the year that was here in the trading block, what really resonates, what really stands out to you?
I mean, mostly how I liked how wrong everybody was on everything.
That certainly was a theme last year. Yeah.
Another thing also I thought, which was interesting, was the massive swings we had in a couple of like the tone changes. You remember at the beginning of the year how just awful gold was and how awful the gold miners were. I mean, they were at zero and going to zero, and commodities and all that. Just everybody's like, it's over. Nobody's ever buying anything again. Nobody's buying any copper. Just it's all at zero. And if you look at 2016, that stuff came roaring back, roaring. The death of oil, somehow we didn't see that $30 a barrel oil. Didn't see it. We had the U.S. industry massively cut production, and OPEC had to do the same. So there was market forces still work. Also, I think the rise of another thing was kind of the rise of the internet giants, like, Google stock all-time highs, Amazon, obviously Twitter not, Facebook though. You really started to see the dominant players become more dominant. Microsoft now kind of moving from software to cloud, but dominant in their space nonetheless. Netflix, content provider, just you're starting to see, like, and I think the Q sort of they perform well. I still think they're have longer to go, barring whatever market catastrophes we have, but that, like, the internet sort of taking over the growth. If you look at what are the companies by the top market caps, you're looking at Apple's an older company but kind of an internet company, with a top 5 market cap. Google, Amazon, it's on its way. Facebook is on its way. So all of a sudden, the internet and technology stocks, once again, are kind of, everybody's looking around and saying, they're putting money into them. Not saying, there isn't still a story with, trying to pick up oil stocks or the producers. I think even the offshore producers are they're kind of beaten down a little bit. But I think it was also, too, 2016, it was the quiet story of the rise of technology and the dominance of the really big technology companies, and they're still growing. Like Google still grows, Amazon grows, Netflix grows. They're all growing, and they're all, starting to reach into farther places. So I thought, we had the big Michael probably hit on all the other stuff, but I thought just the rise of technology and the dominance of the internet, while it's already been growing and growing, now as it's basically a 20-year-old industry that's dominating growth, and everything connected to it dominates growth. So, and I don't see that stopping. I think it's a global phenomenon, and it's the reach. The global phenomenon is even easier because you just grab your phone and you're on. So I don't see that trend stopping, but I think everything, and I personally own all the stocks that are connected with internet infrastructure, anything like that. I just don't see it stopping. And I think it was kind of the quiet story of 2016, besides all the great, headline stuff that Tucson is just going to have a grand old time with.
Yeah, rise of the internet. I'm just waiting for the return of pets.com. Then we know it's official, right? Then we know all the
it's
that sock puppet. When he's back, then you know the worm has turned for real. Uncle Mike, you always took an interesting view on a variety of different things that caught your eye here on the show over the years. You have always been our resident Apple fanboy, less so this past year or so, but that was always one of your roles. You also liked, you were our resident commodity guy with your particular interest in gold via GLD, and of course, oil via a variety of different, including your $30 puts in XLE, which you continue to blast out ad nauseum. So that said, what really resonated with you? What sticks in your mind from 2016?
Well, a few things. Man, I wish I could still sell some more $30 puts on XLE.
I think you've crushed all the bids to nothing now, sir. None left. They all pale in front of you and run away.
Yeah, my million lot at a penny. I'll do one of those, right? 2016 overall, we had, I agree with Andrew, a lot of people were wrong. On this show, we even talk, I'll be honest with you, I wasn't betting on the Brexit outcome the way it was. I wasn't betting on the election outcome the way it was. I was kind of just, in terms of putting my money where my mouth is, for both those events, I kind of sat them out, which I would in general, but my expectation was not that. The other thing that I remember when we were talking a year ago is that everyone was saying for 2016, yeah, we'll probably have 3 or 4 rate hikes in 2016. That didn't happen. It happened toward the end. So there was a lot of people that were, it was the year of being wrong, from what it seemed like to me. The other thing that a lot of people were wrong about is that, if Trump does somehow get elected, then the markets are going to probably go down quite a bit right after he gets elected. And that was obviously not the case. We had the Trump rally. So besides people being wrong a lot throughout the year, a couple other things with which I thought that were interesting for 2016. The 3-day options. Now, in certain underlyings, you can get options that trade for 3 days, Wednesday expirations. So that's a new thing. And if you want to really take advantage of your theta and you want to, or you just want to get an expiration on a Wednesday a week from now instead of having to go all the way out for Friday, you have the ability to do that. I think it's definitely been an added tool to my trading arsenal for sure, for a lot of reasons. Probably my favorite rant of the year. I'm going to go with my own rant, of course. Since it's my favorite, I'm going to go with my rant. It was my rant on the EpiPen earlier in the year. It's not often that we get so excited about things on this show, but that was probably my favorite rant of the year, and that I got to voice my opinion anyway on the evils with which that company was doing to people that really needed the EpiPen, because I guess making $600 on a $10 thing just isn't enough. Recently, it looks like they've come down a little bit, and I'll be curious to see where that goes once we have Trump care coming in, is what it sounds like. Just listening recently that now with President-elect Trump's efforts to get rid of Obamacare, I thought it was, I was watching one of the late night shows last night, and they said that Obama is saying, well, we should refer to it as Trump care. And the late night talk show host said, oh, well, that'll really show him. He hates having his name attached to things. But I thought that was kind of funny. So I think that was another thing that's going to really play a factor in years to come, is to see what's going to happen with healthcare, to see where that goes. The other thing that I really noticed about 2016 is that we were talking on the show, whenever we see someone buying a ton of out-of-the-money calls in the odd block, or some ridiculous-looking trade to where they think that that stock would have to go up so much for that to even come close to making money, and then all the times that it actually did. The year of the odd block, the odd block trades defying the odds, that happened rather frequently on this show as well. So 2016 had a lot happen with it. To add to Andrew with the technology, Apple did have an up year. Did have a pretty nice year in terms of where it's going with the company. But I'll still stay to my claim that until they have something that's very innovative, that's when I will come in. Or if the stock goes down to 80, let's say, maybe then I'd consider coming in again with some more larger amounts of money. On the commodity front, we have gold. Gold was GLD. I remember at the beginning of the year of 2016, I'm like, well, I'm out of this. I can't be in this anymore. We've made a bunch of money on the hedges, but I'm pretty much going to be done. So I pulled my hedge off and put a stop loss in at, I believe, 99.95 or something like that on GLD, and then immediately rushed up to 115. So that was actually a very pleasant beginning of the year for me in the gold front. But gold did come back a little bit this past year. It was up about, I think, from the beginning of the year, it did make about 8% on the year. So not quite the huge years that it has had in the past, but it did have a pretty nice uptick this year. It was up as high as, I believe, around 126 at one point. So we had some movement in the gold area. The thing that I was excited about the most for this past year was XLE. XLE opened the year around the 60 level. Right now, as of today, it's trading 75. So XLE was up over 20% on the year. So for those of you that got into XLE and actually just held it over the course of the last year, you did pretty well with that. And then the final thing that I think really played a mark in 2016 was the bank stocks. Towards the end of the year, there was a lot of, in my opinion, I talked about it on the show as well, it was a perception-based rally, meaning that a lot of people believe that it's going to be that's going to be of benefit to the bank stocks. And with that being the case, there's a lot of bank stocks going higher. Now, one thing that I noticed right away with that is if you're a Shark Tank watcher, Kevin O'Leary, the guy that calls himself Mr. Wonderful, although ironically I think he actually stole that from a professional wrestler, Paul Orndorff, from back in the 80s. But he claimed that those regulations aren't going to be going away anytime soon and that bank stocks are a horrible thing to be in. But if you add the perception of that going away, that's what I believe really drove the market, as well as the fact that interest rates have come up a little bit, and that will be of benefit to the bank stocks, and the fact that if the perception does become a reality, then that'll be of benefit as well. So that is my 2016 in a nutshell.
Thank you for that, Uncle Mike. And of course, 2016 had a lot of interesting components. We finally have the actual numbers to look back on the year that was 2016. And, we were kind of keeping a bit of a running tally every month. We would check in and look at the numbers and see how the year was keeping compared to 2016 and how it was stacking up. And it seemed like the year, for the most part, was always lagging a little bit behind 2016. And then, of course, the tail end of the year, the November craziness notwithstanding, it really was, getting into, into Q3 and the latter portion of Q4. There were some pretty quiet periods. Even I think that last week, which is always a quiet time. I think we saw VIX doing 70,000 contracts in one day, which is, if you follow that product, is pretty anemic. So we saw some long stretches of quiet low volume activity. The ADV in VIX was constantly eroding throughout the year from about 600,000 at the beginning of the year down to, I think, about 550 or even 540 towards the end of the year. So that was kind of the tail across a lot of products, and that ended up being the tail for the year. When you look at 2016 versus 2015, from our friends at OCC who put out their cleared options numbers from last year, equity options overall off nearly 3%, about 2.72% compared to 2015. Overall options volume in particular was off about 2%. So combined all of that off about 2%. And why was that higher? Well, there were some bright spots. Index options volume up about 5% compared to last year. But that's also, I think OCC is expanding some of their business in that front as well. So that may be more of an OCC thing than it could be an actual volume thing. Overall volume off about 2% last year. So looking at a total in 2012 of 2016, just a little bit over 4 billion contracts, 4,063 million to be precise. When we look back at the last half decade or so, from an overall options perspective, you got to look all the way back to 2012 to find a year that was more anemic than this year. When we saw 2012, it was 4,003 contracts. Pretty much every other year in the last half decade or so have beaten this year. We saw about 4.5 billion contracts in 2011, 4.1 billion in 2013, 4.26 in 2014, and about 4.14 last year compared to just 4.06 this year. So a pretty relatively, I wouldn't say anemic, because compared to 10 years ago, it's decent paper, of course. But overall, compared to recent times, not quite the gangbusters year some people had hoped for. It seemed like that was the way it was going to play out through most of the year, so maybe no surprises there. But still, Mr. Rock Lobster or Mr. Uncle Mike, this come as a surprise to either of you. And what do you think we attribute this 2% decrease this past year?
I actually am a little bit surprised that we came down. I would think that with the market craziness of January, the Brexit, and the election, I would have guessed with those three large events, that would have kind of put us over a little bit for this year. But apparently that's not the way with which it's gone.
The only thing I would say with that is it's my favorite line, and I'll say it again and again because I think I invented it, but maybe I'm not sure. Maybe I didn't, is option traders love a bull market. In reality, most people just like to buy calls and watch stocks go up. That's when retail comes in. And I don't mean sort of the active retail that is involved now, but just more mom and pop people that are going to trade options that are going to expand because there's lots of people. If they start buying calls, it's a different story. And I think there was some scary moves, generally people don't buy the dips or, they kind of sit on the sidelines, and that some of that volatility helps, drive people away a little bit. So the only thing I would say is it doesn't surprise me hugely, even though I think the S&P 500 had a respectable return this year. But it kind of felt like, we kind of made it all up in the last month, and everybody was on pins and needles the election was making people sit on the sidelines, and the Brexit thing made people sit on the sidelines, and then the beginning of the year made people sit on the sidelines. So I can see where that came from. What I would be surprised of is if the VIX futures were actually down. I would guess that would actually we would have seen more VIX futures contracts traded. But I'm looking at the numbers. It looks like VIX futures actually went up. Am I crazy about that, Mr. Mr. Longo?
If you give me a second to dig and talk amongst yourselves, I can find it. Yeah, VIX futures total. Well, I'm looking at this is options and futures from the CBOE up 1%. I don't know if they broke it down specifically by futures.
I'm looking at OCC contract volume December 2016 was up quite a bit, it looks like.
I'm looking at the OCC.
Year over year.
Yeah, the release from CBOE. Let's just go through it. Several trading records set for the year. Total volume and average daily volume and index options at CBOE reached new all-time highs with 430.7 million and 1.7 million contracts respectively, each up 6% from 2015. Total volume and ADV and SPX reached new all-time highs with 258 and 1 million contracts, respectively, each up 9%. VIX futures at CFE set new records for total volume and average daily volume for the 7th consecutive year in 2016, with 60.2 million and 238,773 contracts, respectively. Obviously, that's for total volume and average daily volume, each up 16% from 2015. So there you go, Mr. Rock Lobster. Ask and you shall receive. Not surprisingly, there were a few bright spots, and volatility being one.
Right, and I just even from our business, because we specialize in teaching people how volatility works. That's what we do. Besides running our little fund, we saw our business grew as well. So it's not. I can see the demand for as people start, as it becomes more of a normal thing. I just see that. I see those products growing. It's volatility is a growth business, because as much as all the big central bankers try to fix everything, the more they try to fix it, I think the more volatility they end up creating. But hey, what do I know? I'm just an old volatility trader.
Yeah, it is weird. Volatility, right, is a growth business. Yet we yet to see really the growth of products in that business, with aside from some variations on VIX. Mike mentioned the weekly, some more of those, and obviously the death of VXXT and the switch to VIX weekly options. Those are all popular, but anything that doesn't have VIX attached to it, that's a volatility product, has a lot of headwinds against it, which is interesting. So people are interested in vol. They're interested in VIX and some of the corollaries. Some of these levered ETFs and things out there obviously do well, but those are all VIX related. Once you get outside of that, microcosm that is VIX, I kind of wonder what else we're seeing, in the volatility space. But we'll leave that heavy pontificating for vol views as we roll on into our favorite odd block candidates from 2016.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. Going to do things a little bit differently today. This is usually the portion of the show where we break down what's catching our eye in today's activity. We do have some of that, but I don't think we're going to get to that today, because we're instead casting our gaze backward, not present or indeed forward. Going to look back at the year that was, and obviously we profile a lot of unusual activity on this program, and indeed on the website, the mothership, theoptionsinsider.com. You guys who just listen to the show think we only do it twice a week. Nope, every day, day in, day out. So when I talked with the Rock Lobster and I gave him the Herculean task of filtering through some of his and our favorites out there, it was a challenge, because there was just so much of it, and there were some standouts. Every year there's some standouts. I still think back to, in fact, for a minute there I thought it was 2016, but it was indeed 2015, the infamous Men's Warehouse, and how that one blew up in our face so spectacularly. It was so great. We roundly mocked that friend, and he laughed all the way to the bank. So some of those still stick out, but there were indeed some big trades that you could point to and say good. Some of them you could probably guess. You could think, hey, did pretty good to be in the financials and banking sector towards the end of 2017. There were a few good moments for mining and gold. There was a theme of this past year, mining and gold pretty much was there. Also, energy-related names were very heavily favored up there. And one of these may even surprise you. Since you curated this list, Mr. Rock Lobster, I will allow you to commence. Where would you like to start, sir?
I think I like to start with the trade that we thought, again, going on the gold theme, just because all that is dead can be alive again, which is one of my favorite trading themes, is the GDX call buyers. Do you remember they were just buying tons of those upside calls? And I think this was kind of our Men's Warehouse moment for the year, where what was our date was, I think it was early in the year. I'm going to say Feb, and at the time they were buying the June 22 calls for 32 cents, which were wildly out of the money. And at the time, I think GDX was trading $18 or something like that. And no, $16. So they were out of the money by a good 50%. And by the time they expired, they were $5 in the money. So that was at 40,000 contracts. So,
that's a nice little some pocket change,
It's not $5 on a one lot; it's $5 on a 40,000.
It's not selling, selling a covered call for 6 months for 7 cents and having it go all the way to a penny and closing it out.
And I remember too, this was early in the year when and that's why Soros is a rich, smart guy. You remember he was just piling into gold and gold miners and,
Yeah, that was the big story at the beginning of the year. Soros is into gold.
It would not surprise me if it was that guy, because that's it. There was a lot of stuff that looked like it had his fingerprints all over it. And it's funny because I was looking today, with these inflation hints and all kinds of other stuff, all of a sudden, when the miners got beaten down, I mean, they're down, 50% from their highs this year or something like that, 30% from their highs, although still up on the year. It wouldn't surprise me to see those bounce up again. I mean, the volatility is relatively inexpensive for the types of moves they're having. So, and I just started seeing that kind of volume again. So I went, well, maybe they're back. So that's a theme to keep for 2017. We'll see how it looks. The other one I don't think this made it to our to the option block, but we also post at Option Insider Radio Network unusual activity, and then we just grab stuff from that for the show. So it's probably worth it just to check out the activity, because I always try to find trades that either it's somebody closing, which is usually a sign of a counter market move. Obviously, opening trades are always interesting and stuff that really doesn't happen much on. And lastly is the house money roll, guys. And we define like the house money roll where somebody bought something and they want to stay in, but they want to take their money off the table. So they roll up a strike. It's a common technique for funds, especially if you're doing things right. You just keep rolling your money up. And every time you just scrape some dough off the table. And this one, again, spectacular, like AMD was dead. And they rolled the 6-level calls, which they bought for about nothing, to the 9-level calls on the Jan 2017 line. And they did this in the middle of the year, around middle of August. And August 23rd, actually, is when we posted it. And AMD now is 11 and something. Where just, like I said, all these chip makers are now making more infrastructure stuff, and more products are kind of coming online, and almost everything's going to have a chip in it. So, I mean, for whatever it means, just AMD just came back from the dead. A huge move up this year. So yeah, that was a size trade. That was 66,000 calls rolling into 80,000 calls.
That was one of the more sizable ones for the year. Yeah. That's the guy's like, I liked it so much, I'm going to do another 14,000 roughly or so on this name.
Yeah. And then the last one I'll just do here fast is
really quickly before you get to that one, it's really quickly. I want to look at the AMD thing because you're right, it was an impressive one. And I'm looking at it right now. Those calls there were the Jan 9s listeners. Those things are trading about 2.25 or so right now. Looks like most of it has been closed. There still is 25,000 contracts open. I don't know if that's a little bit of a legacy remnant he left on. Looking here at, it seems like a lot of his paper closed out, and we saw some decent sized prints back in November, late November. Seemed like it closed a lot of them, but still, yeah, this was an interesting trade. The guy laughing all the way to the bank. Yeah, who'd have thunk? Looking back on AMD, you're right. It was kind of dead money. It hadn't done anything for a long time. And then all of a sudden in August, it pretty much doubled. So our friend here, fairly timely, to say the least. All right, sir, have at with our final look back on 2016, sir.
And this one is the jury's still out. The massive. I think this was the biggest block we posted. 320,000 XLF, Jan 2017, 22 calls. Just an enormous block of options. So, notional on that is 32 million shares. It's a big trade. And what's funny is who sold the other side. And right now those are in the money, I think, as a straddle. They're about even on the whole thing. If they were able to scalp and trade around it a little bit, because I noticed some of the volume is lower, so they probably dumped some of the calls when it rallied. But just enormous trades, and the jury's still out on that one. They got to kind of sit around on it. I mean, there's a lot of intrinsic value in it, but those just stood out to me as, being big and being mostly right, but also really riding the trends when in a timely way, like. Right after the election, this guy dug into the bank stocks. GDX, when things were awful, buying the miners. AMD, buying early and staying with it the whole time. So just a very, the contrarians made some dough in the odd block, that's for sure. So even when it looked like it was hopeless, it definitely wasn't hopeless.
Yeah, you're right. And there was some related paper really quickly. I said we weren't going to do this, but we did see some stuff in GDXJ today, Mr. Rock Lobster. Perhaps a little bit reminiscent of what we saw earlier. So who knows? Maybe we saw some size upside calls trading out there. The Feb 44s, 2,000 times for 55 cents. So who knows? Maybe the gold party is not yet done, Mr. Rock Lobster. What say you to that?
I think there's enough worry. It seems like it wants to bounce, and the inflation picture, who knows? There's all this uncertainty about the new president. I mean, you pretty much kind of knew what Obama was going to do after the last, in the last couple of years, and I think it's kind of a wild card. So maybe gold. At least I think the decline has ended for a while.
Yeah, it has been a bit of a rough road there over the past few months. But who knows? Maybe the gold party is back. Maybe 2017, the year of the hashtag gold party. As we keep on rolling, let's see if we can get that one moving. As we keep on rolling into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
I was going to try to do some sort of a look back on our favorite questions from 2016, but there's just so many that was almost a Herculean effort in and of themselves. And I thought then people who are writing in right now don't get any love, so we'll give you guys some love now as well and save ourselves a little bit of work. Really quickly first, since we're talking on the 2016-2017 theme right now, our inaugural question of the week. If you haven't voted, head on over at Options on Twitter and cast your vote now. Still a few days left on this one. Our inaugural question of the week for 2017. We said, you guys, hey, total options volume last year dropped about 2%. How will 2017 stack up? A question a lot of people, particularly in the options business, are asking themselves right now. Gave you 4 choices. We said about the same, so about plus or minus 0.5%, I should say, from where 2016 settled out, or maybe a modest increase, so up somewhere in the 1% to 2%. 2% would be pretty significant. A modest decrease, so down 1% to 2%. And since we ran out of space, we also said big change. So over 2%, plus or minus 2% in either direction. We don't know which one is going to be, just if it's going to be a big change year. So Uncle Mike, we'll start with you. What are you feeling for 2017? How are we going to shake up?
Oh, man. Can you repeat that one, Mark? It cut out a little bit. I'm sorry.
Okay. Our choices are, how will 2017 volume compare to 2016? Will it be about the same, a modest increase, a modest decrease, or a huge change in either direction, plus or minus over 2%?
Sorry about that. I would say it's going to be a slight increase, just because if options do love a bull market, then, well, you know me, I'm the eternal bull, and I would have to go with that. If anything, I don't see a huge amount of difference. I don't, unless we have like a 30% up year or some type of craziness throughout the year this year. I don't see a huge increase in it, but I would see a little bit of an uptick, but not a lot. That's where I will go. And that's where I think the audience is going to say as well.
Oh, interesting. Mr. Rock Lobster, where do you fall, sir?
Yeah, I think we're going to be a little higher in volume. I hate to be so rosy at all-time highs, but it feels like that's where we're going. Although, of course, punctuated by some spectacular drops. But I think we'll see a little more volume this year.
Yeah, I'm kind of in the same boat as you guys. I feel the modest increase as well, up somewhere in the 1 or so, maybe a little more % range. I think 2% is asking a lot, but this was a pretty anemic year. I think we can pop from there. And our audience, showing how intelligent they are, also agreeing with us. Nearly half, 44% of the listeners choosing a modest increase. 32% though coming in with just big change, plus or minus 2%. They don't care which way it's going. They just think volume is changing, which is kind of interesting, perhaps predicated by, who knows, if we have a protracted rally and it continues, what that will mean for the options market. That could be kind of anemic. People might decide to just buy stuff, buy the underlying and hold it, or it could be the opposite. We have a moderate sell-off, could juice some vol, get some volume going, but if it's a protracted, aggressive sell-off that wipes everything out, sometimes people like to take their ball and go home in those environments. So those are kind of question marks. And then 17%, so about the same, and 7% say a modest decrease. So interesting stuff there. Let's move on. Let's see, what do we got here? By the way, people were voting. We asked them also to vote to where they thought VIX was going to close for 2016. About a tie. It was a tie between 13.75 and 14, and VIX cash, of course, and over 14. Mr. Rocklop, you'll look up exactly where VIX closed for 2016 while I pull up this next question. How about that? And you can see which one was right, because the other one, there was a pretty all-over-the-board vote on that one. All right, then we have, let's see, bunch of questions we can hit on. Let's start with Scott, who he writes, I've benefited from your unusual activity report. He puts in parentheses, of course, there's due diligence on my part. Well, we expect nothing less. We don't want you guys to just follow us hook, line, and sinker. Think of us as kind of, showing you guys the flag, raising the alert to say, hey, look here and see what's going on. Don't just blindly follow us to say, hey, we said someone's buying calls, go buy calls. So I'm glad you're doing your due diligence. Scott goes on to say, thank you. You're welcome. He goes on to say, do you have any subscription services for unusual activity? More in-depth, great insight. Loved how you filtered the noise. Happy New Year. Well, thank you, Scott. Love the love. Thank you. Right back at you. We love all of our loyal listeners. Love people who do due diligence. People ask us all the time, do we sell anything? And the answer is no, which makes it easier for you guys. Everything we do is pretty much free. So if you want more of that unusual activity, we are looking at some more ways to get that stuff to you even more. We do a lot on the website now, so that's probably the easiest place to go. We also do tweet out links to that stuff throughout the day on StockTwits and Twitter and on Facebook, so you can find it there. So you can't access a lot of that stuff. We are also working on maybe bringing back some more unusual activity-oriented shows to the network, as well as maybe some more intraday type alerts and newsletters on the email front to keep you guys abreast of that, because a lot of people have a similar question to you, Scott. So, and Happy New Year to you as well. Oh, really quickly, since he writes in a lot, I'll give him a two-parter. Why not? He goes on to ask another one. He says, I would like to learn more about options and unusual options. Do you have a session on spreads? Bull spread, bear spread, how deep in the money should I purchase? How far out months till expiration should I go? And again, do you offer any premium service? Happy New Year, you guys rock. Again, no premium service, but we do have a lot of stuff covered. Look at some of the back archives of this show. Probably the easiest place to go, really, is our Options Bootcamp program. Start on episode 1. Sounds like that would be useful for you, and just work your way through. We tried to set up that show so it progresses in a logical progression, so you start there and you go on. Also, our friends over there at Trade King do a good job on Options Playbook Radio. They have that titular Options Playbook, which also takes you from 0 to 60 from an options perspective. And you can follow along with the playbook. You can go to their website, optionsplaybook.com, and listen to the show while you're doing that. Or, of course, buy the playbook, read it along. But, however, those are 2 great programs. If you listen to one or both of those, you're going to be pretty well suited to all this kind of stuff. That said, Mr. Rock Lobster, I'm sure you guys out there in Option Pit would like to offer a few things in this realm. So you have anything you want to add to our friend Scott?
Oh, for unusual activity?
He wants to know a lot. He wants to know about unusual activity. He wants to know, can we tell him more about spreads, bull spreads, bear spreads? I'm guessing your Options Bootcamp maybe covers that as well?
Yes, Options Bootcamp covers that. You can go to our website and just go to our store and learn how to price all that stuff. So that's what we do. We actually teach people about trading options, and we try to do it in a way that is sort of channeling our market maker past and kind of teaching our clients the tricks we use as market makers for survival. How and why things get priced the way they get. So yes, as far as unusual activity and stuff like that goes, it's on the website as we post it and see it. And just to remind everybody, I view it as a news service. I feel like I've got to spend a lot of time on the beat in options, and I'm just kind of reporting what we see and how, and using a little bit of insight as a former floor trader, how the funds, how they like to position and trade and get into things. Usually there's a way they do it. And when you see the options go up a certain way, you're like, well, if it looks like a duck and it smells like a duck. So there's a reporting. Plus, we do get reports from the floor as well. I just call guys that are still there, although there aren't many left, and to see if anything traded near them. And then we also can get some floor information. So that's our that's my 2 cents. Maybe it's 4 cents. Who knows?
There you go. And I'll add my 2 cents, of course. I like Andrew's analogy of how it's being a news reporter, so to speak. No matter what you're going to do, you're ultimately responsible for your own money, your own trading, your own decisions, and everything with which you do. So I think that if you're going in to get some type of a service, it is something to where you're looking to get help for what you do. And I even say that to my own clients, is that I help in what you're trying to do with your retirement. And the same would hold true with whatever service you're looking to buy. So I think it's important that you have control of what's going on. And if you are looking to get some type of premium service, or if you were looking, like I tell my clients, it's my job to help you. Think of me as you're the head coach and I'm the offensive coordinator for those of you football people out there. And I'll get what we're trying to do, but ultimately you're responsible for what you're doing.
All right, next up we got WilliamPZE. He wants to know, does it make sense to buy Rite Aid puts? Ticker symbol, of course, RAD, R-A-D. He says puts on March 7th as so I guess March. I think he wants the March 7 puts. He wrote it a little weird here. As Walgreens will close the deal on January 27th. Your reply is much appreciated. Thanks, Bill. Bill, this is an interesting one. Rite Aid, of course, has a corporate action going on right now. The stock right around $8.19. These corporate actions are kind of funky. It all depends on the price they've negotiated. I'll have to dig it up. I don't know, Mr. Rockloss, I know you follow Rite Aid on a regular basis. Do you know what price this deal is going through at?
I thought we were kind of at that price.
I would think so. Unless you think that would be priced in, right? So I'm assuming somewhere around the 8 and change level.
Yeah, and I can't remember what deal it was because it came off my radar screen after we had a little position. I closed it. There's still some latent volatility in the options. So is it an all stock deal? I don't know what the reason why you'd want to buy puts in there. unless the deal falls apart. So if it's a punt on that, that's a possibility. That's really as usually why you only buy puts on a deal stock, because all of the volatilities they're trading at they indicate there's a reason the vol is there, besides because Walgreens volatility is about half of what Rite Aids is. At least it's like 25 or 30%. So it looks right now as there's some sort of spec that the deal might fall.
Sorry about that. I was doing my due diligence here, looking at what the deal price was, and of course, every site on the planet has to pop up an ad in your face while you're doing that. But yeah, you're right. It does seem like only reason to do this would be to spec on everything falling apart. They are the acquiree, I believe. So in that case, yeah, only reason to pick up puts. And these puts still have a little bit of juice. They got about 40 cents in them. So it's not an insignificant outlay. It's not like you're picking them up for a nickel, and may take a flyer on this thing falling apart. 40 cents, you got to think about it. So I don't know. I would purposely, unless this guy's got some inside track on the Rite Aid deal falling apart, I would not be in a hurry to do that. And if I did, I would certainly not just buy them. I would spread them off, probably maybe you do a little 1x2, 40 for those. And then it depends on where, we'll have to look, see where it was trading before that. The 5s are about 15 cents. That could reduce your outlay quite a bit. And maybe you get RAD for a much cheaper price if it does indeed fall apart. I think it was trading before the deal at about 6.35 or so. Got down to about that low. So it seems like 5 might be a safe range. So maybe if you do want to go that route, maybe the 7.5 1x2 is a safer way to go. I don't know. Uncle Mike, never safer, but maybe less outlay. Getting your juice almost for free. Not quite for free, Rock Lobster, but almost for free. Get your juice close to free. Not quite as compelling of a title on this one. Let's see. Oh, we got another one here. We got time for... I like giving people their shine here on the show whenever possible. We'll have to do an all questions episode one day. We get so many. This one came in, I think, right as we were finishing up the show last week via the live chat from Real Arcade. I think you might even still be in there listening today. He said, I just entered the industry. So first off, congratulations. And he says he passed the 7 and 66. So congratulations to you there as well. But I won't be doing a lot in the options arena aside from hedging. I have a lot of time in the next month. Well, we like guys like you. You can listen. Do you guys have suggestions for furthering options knowledge and possibly becoming a specialist? Wow. In a few years. So he really wants to go down the rabbit hole, a specialist. Wow. That's a path that, Andrew and I trod many years ago, a little bit more challenging, unless he doesn't mean specialist in the old world sense. Maybe it just means becoming more extremely knowledgeable, even though he's an upstairs, not a traditional options specialist. Maybe I'll assume that, because the former is a challenging track to try to replicate in 2017. But that said, you have some time. You're doing the right things. You're listening to our shows. I think if you want to mainline, like the shows I mentioned before, Boot Camp, Options Playbook Radio will give you a good, strong foundation. And hey, they're free. You can't beat that. And that's many, many hours. You'll need many, many hours to go through all of those. If you go through both of those shows, I think there's 50-odd episodes of Boot Camp. So you're talking about 50 hours there as well. I have 100-plus episodes of Options Playbook Radio. But that one's short. That's about 15 minutes. So you're talking more around the lines of probably around 30-odd minutes, or not 30-odd hours in that show. So if you can combine about 80-odd hours spread out over your month, that will serve you well. There are a lot of great free resources. Of course, our site is out there, but there are others. Optionseducation.org, great free stuff, in terms of what they have to offer there, as well as CBO's Options Institute. Our friends Russell and his team over there, over on VolViews all the time. They do a great job over there. They have some classes there as well. You may want to look up, and maybe if you want to expand yourself beyond the free. And I would be remiss, I know we plugged him earlier, he's going to get a second plug. But I know you guys, Andrew, you guys have actually created a few specialists. I believe you have a specialist in your community right now, an actual options market maker that you guys have created. So you guys have gone down that path before. So what would you have to say for someone, if he is indeed intending to become a bona fide specialist in 2017, or maybe a few years down the road?
Well, one is you
don't do it, you madman. No.
No, you have to align yourself with some capital and a trading firm. I mean, they're still there. It's very electronic. There's probably more guys on the floor. I mean, besides, the PSE floor, there's still a lot of guys actually relative. There are a lot of guys in Chicago, but they're mostly in the VIX and the SPX. There are very few floor guys, electronic market, but there still are. There's actually, if you can, but the problem is there's a lot of, let's just say there's a lot of training involved. So you can't really take the Series 7 and then think you're going to be an option specialist. So you would have to find option trading firms that are still hiring. There are one that I started with, I don't know, 20 something years ago, more than 25 years ago. They're still there, but they have an extensive electronic operation. So now it's such a technology game. You need technology, you need capital. Gone are the days you can go onto the floor with some, a pencil and some cards and $100,000 in your account and kind of get going. So that is long gone. So you need to align yourself with some sort of firm that already has a pretty good footprint, and you need how to learn to trade those options. We can teach somebody how to become a liquidity provider, but we charge money for that service, obviously, because it's kind of intensive. But I don't think many option trading firms actually can do that, or at least educational firms. I'm going to say none, at least the way they do it that we do, without having to go to a firm that's already has a footprint on all the exchange floors. So that's what I would recommend if you want to give it a whirl.
And if you're not looking to be a traditional specialist, if you're looking to be an advisor who specializes in options, what I would do is just continue to learn. I think that right now, if you're looking to just hedge, I think that's very wise, but just make sure that it's a very basic hedging. In other words, this is what I would put up a sign at your desk and say to yourself, don't try to get too smart. Because what will end up happening if you're new to this is you'll say, well, if I bought that put, then maybe I should do this. And then all of a sudden you're going to have a very overcomplicated position on it. It's not going to work. So I would suggest keeping it basic at first and then gradually learning more and doing more as you go. If you're looking to bring options into your practice as a Series 7 and Series 66. And to agree with Mark, just because you passed the Series 7, I know how I helped people pass the Series 7 that would need help from me on it, and you don't really need to know a lot about options to pass the Series 7, my opinion. So
yeah, it's not really. I mean, we used to have the viceroy on this. He helped write that exam, I believe, and he used to always say, not much options wherewithal involved in the Series 7. So yeah, if you want to come out to Chicago and try to become an old school specialist, there still are some firms that will do that. CTC, Chicago Trading Company, still around. I think Dash and Liquid Point just merged, making some interesting new entity. Maybe they would pick you up. There's a few others out there, Wolverine and a few others that are still names that will still. They do less of it now. Obviously, Group 1 and some of the other ones that are still out there, Peak 6, that will still bring people in, but it's a competitive field out there. A lot of experienced traders floating around Chicago, as you might imagine. So you're diving into some deep waters, but if you are indeed so inclined, there still are those firms out there. But it's a much tougher road to hoe than it was, say, a few years back in the Stone Age when the Rock Lobster got into this business, and a little bit more recently for me. Oh, getting some love for our boot camp show. I think it was, what's the name? Oh, I can't pronounce it. ELXDX86 something. It says, the Options Bootcamp is the best way to start learning options. Well, back at you, sir. We love that show. Look forward to more episodes of that coming in 2017. We've been kind of busy doing other stuff. That show has kind of languished a bit, but that's another one that's evergreen. You can check it out whenever you need to. All right, let's keep on rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Mr. Rock Lobster taking umbrage at my Stone Age comment. Oh, Real RK is in the chat room. He says he's been trading options for about a year, but he still has a lot to learn strategy-wise, and he thanks us. Well, you're welcome. We love to give you guys the feedback you asked for. And this is Around the Block. We do have Nod Farms coming up this Friday, so we'll keep an eye on that. But I thought we'd mix it up since we are looking at the year behind us for most of the show. Let's look ahead to 2017. And let's, in general, what are some things that are on your radar for the rest of this year, for 2017? Something you're looking at could be in a development in the summertime, in the fall, and next week, whatever is floating your boat. Uncle Mike, we'll start with you. Curveball thrown at you. Go.
Curveball thrown at me. Well, let's see what I can do here. Overall, through the course of the year, I'm going to be looking at the banks. I want to see if the perception of the banks becomes a reality, looking to see if that continues to get better. Also, looking at technology. Technology dipped a little bit after the Trump rally, and I'm not talking about like the big guys like Andrew was talking about earlier. I'm talking about the sector in and of itself. Those are two things that I'm looking at. Can energy continue? I don't know if it's going to have quite the year it did last year, but I do see more upside from energy. So I am watching those things. And of course, we got a new leader of the free world. I'll be watching him as well. And I'll be interested to see how Twitter, not the stock, but just the action of him using Twitter plays a role in our markets in the future, because that ain't going away.
Yeah, remember when Obama came into office and it was a big deal if he could keep his BlackBerry? Now it's like, will the president be able to tweet? He certainly does seem to have an impact with his tweets. So if that keeps up, that'll be interesting. Mr. Rocklobster, same question for you. Curveball, go, swing.
Curveball, I think everything that is ugly this year will be beautiful next year. Still looking at beating down oil drillers, offshore oil drillers, stuff like that, stuff that everybody kind of written off for dead. And I still think that the infrastructure guys will only become larger and stronger. So I think those are two. One, the bottom kind of coming up a little bit, and the other, though, the strong getting strong is kind of, and almost saying it's like blue chip, like Google's a blue chip stock, but maybe it is. It's certainly getting big enough. So those are the things I think are the bigger themes. Those are the equity themes I'm looking at. And then as far as vol goes, I think we're gonna have another year of vol swings. I think the moves are going to be sharper and shorter this year than they were last year when we have them. So, you got to keep your pencil sharp if you're going to trade volatility. But I think every year it seems people get a little savvier, and then all of a sudden you get another generation of people that aren't so savvy at all. So we'll see. But I think we're going to have sharper but quicker moves both on the upside and the downside of vol this year than we had last year.
I thought you were getting a little wistful on me for a second there, saying everything that was ugly last year will be beautiful this year. But no, you were referring to the market. I was like, wow, getting a little retrospective on this. Going ahead. A little wistful in his old age up there in the hinterlands of Maine. But no, that's going to do it. The music means we are done, unfortunately, with our 2016 look back year in review. Tell us your thoughts. If you have something you think we missed, a trade that was interesting to you, a product that really caught your attention, a trend, whatever the case may be. I know for me personally, looking ahead to 2017, I think the big thing is going to be how all this regulatory reform plays out in the options market. Dodd-Frank is completely up for grabs again. It was such a huge piece of legislation it was, and now it all may be completely unraveled, or big parts of it, like the Volcker rule, which kept big houses from actually playing in the derivatives market, may be completely revoked, in which case, game on for this stuff. So that could be a big change going forward. We'll see how a lot of this plays out. Not those sexy things, but if you're interested in that topic, actually, I am running a panel on it on this Stack conference next week. So we'll be diving deep into all things Dodd-Frank. Look for that next Wednesday, January 11th, here in Chicago. Frigid January in Chicago. But before we go, Mr. Rock Lobster, what is cooking in the land of the pit, sir?
We're going to have our Vol Master class. It's a 10-week class starting January 17th. I think it's a Wednesday. Actually, it's a Tuesday. So that is for all you want to check it out. Learn if you like what you're hearing on the show. You can give us some money, and we'll teach you about how volatility works.
There you go, optionpit.com to learn more. Uncle Mike, same question for you, sir.
If you guys are looking for a financial advisor to ring in the new year, please give me a call or send me an email, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
All right, everybody, and on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show, and of course, for tuning in all of last year. We love you guys, and we want to see you again this year, so stay tuned. A lot more fun stuff coming to you. And we'll see you next week for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.